Good morning, Bitcoiners. Hello, and welcome back to your economic calendar, the news and analysis you need to start the week off right in Bitcoin. I'm Mauricio Di Bartolomeo, co-founder and chief strategy officer here at Ledn, and today is Tuesday, June 28th. We have a very special episode for you this week. As always, lots happening in the markets. In today's show, we're going to talk about spot Bitcoin ETF redemptions and how those impacted Bitcoin price last week. We're going to look at some of that activity and how that could have impacted the price into last weekend. We're also going to talk about central banks who are actually meeting in Europe this week, and that includes the Federal Reserve, the European Central Bank, and the Central Bank of England, among others. We're going to talk about what we can expect from there. And in the blog version, we're also going to be looking at the global impact that higher fuel and food prices are having in the worldwide economy outside of the United States and Europe. So, lots to cover. Grab your coffees. It's going to be a great one. And starting as we usually do with Bitcoin here on the weekly charts, we see that Bitcoin actually found some footing last week, closing higher by 2.31% at $21,000 and change, $21,027, after dropping significantly in the 2 weeks prior. And just to get a sense of the drop, Bitcoin in the previous 2 weeks, starting from June 6th, essentially the week that started in June 6th, and essentially the one that ended on the 20th, we saw a drop in Bitcoin prices of more than 30%. And we just saw just last week on the candle, on June 20th candle, again, found some footing and was higher by 2.31%, just marginally. We're going to talk about how that price action compares to other assets in a second. First, let's talk about what may have triggered this drop in price on the week of the 13th. And to find some clues around that, we're going to look at the flow of funds in and out of publicly traded crypto funds, including Bitcoin, and see what that impact was. And this is essentially on the week that ends on June 26th. So basically, last week, we saw that there was essentially over $400 million, $422 million that flowed out of Bitcoin funds that are traded in public markets. So publicly traded Bitcoin ETFs saw outflows of $422 million last week. And that was made up of several funds with the bulk of the withdrawals or the outflows coming from the Purpose ETF fund, and that fund saw almost $500 million worth of withdrawals. That's Purpose ETF is out of right here in Canada. Now, diving deeper into the action around the Purpose ETF, Arthur Hayes, he was the founder at BitMEX, published an interesting thread over the weekend highlighting just this. And what he highlighted was the fact that the Purpose ETF offloaded 24,500 Bitcoins into the market close last Friday. The timing was interesting as fiat rails are closed over the weekend, and this prevents people from sending additional cash to buy spot Bitcoin. The big sell-off on Friday triggered what's called a run on stops, meaning that investors got margin called into the market close on Friday, could not find additional collateral over the weekend, and which forced some large liquidations from big investors over the weekend. And since the weekend has light liquidity, again, because of the closures of the fiat rails and less trading activity overall, this has a higher impact on prices. And so these liquidations essentially combined with low depth in the order books, which triggered essentially a big move down. Now, from the volume chart that we can see here, and this on your screen is the chart that Arthur Hayes published, we can see that the first big red bars are essentially the big sell-off into the Friday close, and then we saw continued selling with big volume into the sort of lowest point, which means that, or which could likely mean that there were some big forced sales, some big forced liquidations. And after the big sales were through, after the big liquidations had basically finished, we saw the market rallied on pretty light volume, pretty little volume. So essentially, once that those forced sellers were out of the way, the market was able to recover and find some relief. Now, as Mr. Hayes also pointed out in his thread, we may not have seen the last of the forced sellers in Bitcoin. If any of the large crypto platforms that are currently in trouble were to go through a bankruptcy, there would be much more selling or forced selling in assets, because most likely these assets from these troubled platforms would have to be converted to their dollar equivalent for the legal proceedings, which again would cause some more forced sales, and that could put pressure on prices. Now, relatively speaking, going back to Bitcoin and comparing it to other markets, Bitcoin's price action was basically underwhelming last week relative to other assets that recovered and bounced higher. And to illustrate this, we're going to open up the 4-hour chart on Bitcoin, and we're going to basically go out on a few days out and going to compare that price action to the S&P 500. We're going to compare that to the NASDAQ, the DeFi perps, and even Ethereum. So as we can see from the chart, Bitcoin's performance was actually relatively worse than that of the S&P, the NASDAQ, the DeFi, perpetual swap, and even Ethereum. Let's just add Ethereum here to this list so that we can see. And even Ethereum. So again, relatively speaking, Bitcoin was under a lot of pressure as compared to these other assets. Looking at the futures markets, well, and again, before we move to the futures markets, this kind of relative performance in Bitcoin can further illustrate the impact of potential forced sellers in Bitcoin, which perhaps were not, the same dynamic was not present in these other assets that we're covering here. And so the forced sellers did have an impact and have caused Bitcoin to underperform, relatively speaking. Now, moving on to the futures markets and looking at what that is showing us, we can see some interesting shapes here start to come up. And I'm just going to find the annualized basis chart 1 second. So this is the annualized basis, and as you know, the frequent watchers or readers of this blog, these curves typically are in contango, which means that they are sloping upwards and to the right, which again implies that the farther out the price of Bitcoin, the higher the price of Bitcoin should be. This again, these curves continue to show very irregular shapes. As you can see here, the shape is basically all over the place on Deribit. If we do Kraken, again, the shape is showing some upward sloping and then some downward sloping. There's just a lot of inconsistency among these curves, which just reflects how much uncertainty there is in the markets right now. And now to wrap up this section, we wanted to share some recent news out of Gary Gensler from the SEC. So as you have on your screen, Mr. Gensler, who is the chairman of the Securities and Exchange Commission and is very outspoken about many cryptocurrencies being unregistered securities, stated during a testimony yesterday that some assets like Bitcoin, or quote, some assets like Bitcoin, and that's the only one I'm going to say, my predecessors and others have said they are a commodity. And this, as you can see in the article behind you. This statement should be seen as a positive, as it reinforces the idea that Bitcoin is clearly categorized as a commodity in the eyes of the US securities regulator. We're going to talk about what we can expect in the week ahead and what other forces could impact Bitcoin prices in the near and medium term in our What's section right after this. And as always, we wrap up with what's ahead for the week. Now, it appears that markets have found some footing, some support at the current levels and are awaiting for the next catalyst for their next move higher or lower. However, during the month of June, Bitcoin has been under a lot of pressure relative to the S&P 500 and other assets as we've seen, in part due to the fallout of several speculative crypto funds and platforms in the space, which have led to some turmoil and some forced selling. It's a complex landscape out there with many crypto-specific and macro factors that could impact prices in the near and medium term. We're going to do a quick list of these just to recap them. On the crypto side of things, we have the potential of more potential forced selling, and this could come from funds shutting down or troubled platforms going in through legal proceedings. We also have the potential of regulatory action based on what we just mentioned, given that there's been a lot of investor losses and some funds with some big write-downs. And as a product of the previous two that I just mentioned, there's always the potential for negative media coverage. Again, because there are now investors with losses and there's basically legal action that is being taken by some of these investors against some of these platforms, there's always the potential for some negative headlines to come up, and that could basically impact sentiment around the space. Outside of crypto, looking at macro factors, we have a rising interest rate environment across Western central banks. This is not just happening in the US, this is happening in Europe, in England, and other places in Canada. And these central banks are essentially meeting this week, which again could move the markets. We'll talk about that in a second. Outside of that, we also have the ongoing conflict in Russia and Ukraine, which, remember, is an active land war, and anything could really happen, given that the headline risk is very high as this is an active conflict. And the last piece of this is soaring inflation globally. This is not just a US problem. In the blog version of this issue, you will be able to see in our S&P section how we've broken down essentially some of the global woes around inflation and fuel prices. And so again, this could continue to feed that narrative of just turmoil globally due to shortages of food and very high fuel costs. Now, having said all of that, there's always the possibility of a positive wildcard event, a white swan, if you would. And this could take the form of a gasoline subsidy or a food subsidy in a major economy, or central banks having to take a breather from their rate hike crusade right now, given what's happening with inflation globally. Now, this week will be a busy one in terms of central bank speeches, with the heads of the Federal Reserve, the European Central Bank, and the Bank of England all are meeting in Europe. There will also be speeches from several Fed officials throughout the week, and given how closely markets are looking at central bank activity, markets could react to any of the speeches, whether it be the US Fed members or central bank presidents that are meeting in Europe. As always, we're going to recap this with a summary of the key events and economic data that is coming out in the week ahead. Today at noon, we get a Fed member speech from Mary Daly, president of the San Francisco Fed. Tomorrow at 8:30 a.m. Eastern, we get the U.S. gross domestic product reading. At 9 a.m. Eastern, we get the central bank presidents meeting in the European conference, and that includes Jerome Powell from the U.S., Christine Lagarde from the European Central Bank, Andrew Bailey from the Bank of England, and Augustine Carstens from the Bank of International Settlements. 8:30 a.m. on Wednesday, we also get a Fed member speech. Loretta Mester, Cleveland Fed president, speaks. And at 1:05, we get another Fed member speech on Wednesday. James Bullard from the St. Louis Fed. Remember, Mr. Bullard is among the most hawkish members of the Fed, and so the market tends to listen to him quite closely. And lastly, on Thursday, we get another reading of U.S. inflation with the core personal consumption expenditures inflation index. This is a number that the Fed loves to pay attention to, and they will be looking to read between the lines on this core personal consumption expenditure index to see if they can catch some glimpses as to how inflation could be evolving in the US. So with that, we wrap up this week's episode. Thank you once again for staying with us. If you are not yet a Ledn client, I welcome you to check out Ledn.io and learn how you can start earning interest in your favorite assets, Bitcoin and USDC. We also have the best Bitcoin-backed loans if you need cash but don't want to sell your Bitcoin. And lastly, our most recent product, the Bitcoin Mortgage, lets you buy a house as big as your stack. Thank you, everybody. Oh, if you like this show, if you enjoyed it, and if you shared it, or if you like this show and if you enjoyed it, I welcome you to like it, subscribe to our channel, and share it with your friends. Thank you, everybody. Have a wonderful week, and see you next time.